Hello and welcome, dear traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Here's May 19 and we're starting from GBP USD pair with Jakub Novak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. When the price tested 1.2447, the MACD indicator had already plunged considerably below the zero line, limiting the pair's downward potential. For this reason, we refrained from selling the pound. Later in the day, the test of 1.2423 coincided with the MACD downward move, which confirmed the signal sell, resulting in a nearly 30-point downward shift. Today, aside from a speech by MPC member Jonathan Haskell, there's no significant fundamental data. Hence, traders may attempt to buy the pound near the weekly lows, anticipating a minor upward correction. You may consider longs on the pound today at the 1.2430 entry point, betting on the rise to 1.2464. It would be good to close the long positions at 1.2464 and open a short one, expecting a 30-35 point move in the opposite direction. We can anticipate the pound's rise as early as the first half of the day. Before buying, make sure that the MACD line is above zero or is starting to rise from it. You may also buy the British pound today after two consecutive price tests of 1.2393, when the MACD indicator in the oversold area. This would limit the pair's downward potential and prompt a market turnaround upwards. We can expect a rise towards the opposite levels of 1.2430 and 1.2464. You may sell the pound today after the pair reached 1.2393, leading to a swift decline of the pair. The seller's primary target would be the level of 1.2364, where you may close the short positions and open a long one, expecting a 20-25 point move in the opposite direction. Pressure on the pound is likely to intensify after a failed correction attempt in the first half of the day. Before selling, make sure that the MACD line is below zero or is starting to move down from it. Another selling opportunity for the pound today could be after two consecutive price tests of 1.2430, when the MACD indicator line is in the overbought area. This would limit the pair's upward potential and trigger a market downtrend. We can also expect a drop to the opposite levels of 1.2393 and 1.2364. The next stage of our review is the next major EUR-USD pair Sebastian Seliger describes. The EUR-USD keeps moving lower. After the price had broke out from the following wedge pattern on the H4 timeframe chart and hit the lows at the level of 1.0761. Another local bounce from the lows was shallow and bulls were rejected from the intraday technical resistance located at 1.0846 and then from 1.0811. The momentum is weak and negative again on the H4 timeframe chart, so the bears have the control of the market. But now the market conditions are extremely oversold. The next target for bears is seen at the level of 1.0716. And the down move should resume as soon as the pullback is done. Gold, sweet gold. We got a trading plan for this commodity asset presented by Dimitris Tsoupas. Early in the European session, gold is trading around 1958. In the chart above, we notice a slight technical rebound after reaching a low of 1951. This level was last seen on April 3 and represents a strong bottom. So the metal is expected to continue its bounce in the next few hours, and it can reach the strong resistance of 1978. The gold pair is oversold according to the 4-hour chart. The eagle indicator is bouncing after reaching the 5-point level, which favors a recovery in gold in the coming days. The dollar index is above the 21 SMA in the weekly chart, which favors a recovery in the medium term. Because this trend continues, gold could reach the support zone of 7-8 Murray level, around 1937, and up to the psychological level of 1900. On the other hand, with any recovery above 1980, gold is likely to face strong resistance around the top of the bearish channel, formed since early May around 1990, and is likely to remain under bearish pressure below the psychological level of 2000 USD. In the 4-hour chart, we can see that the area of 1978 has become a key level for gold. In case the price reaches this zone in the next few hours and fails to break above, these could be seen as a signal to resume sell positions. The price could reach 1951 and finally fall towards the bottom of the downtrend channel around 7-8 Murray located at 1937. Our trading plan for the next few hours is to buy gold above 1951. We expect a further bounce and the price can reach the pivot point around 1965 and finally reach the resistance zone of 1978. In case of retracement and if it remains trading above 1950, will be seen as an opportunity to buy. We expect a recovery in gold in the coming hours. The eagle indicator is in an oversold zone, which supports our bullish strategy. And finally, here's Laurie Bailey with USD GPY pair forecast. Let's have a look. The USD GPY pair has done a lot of work this week and reached powerful resistance in the embedded price channel line and the MACD line, the line on graphic, on the weekly chart. If this success is consolidated, the pair will continue to rise, with 142.20 as the target. On the daily chart, the price needs to consolidate above the level of 138.50, surpass yesterday's high, and then the targets 138.40 and 140.35 will subsequently become available. This could happen next week, if not for the price divergence with the Marlin oscillator. If the price settles below 138.50, The subsequent correction will delay the bullish expectation. On the 4-hour chart, the price has far moved away from the MACD indicator line, blue line on graphic. In the market's interest to slow down a bit of the movement, the price can continue to rise with fresh forces later. The Marlin oscillator has turned down, indicating the need for discharge before the expected growth. That's all for today this time. See you online and good luck.